Where do you see opportunity? Because right now you're raising a third global fund, right? What's the target? How much have you raised? What do you like?
We just announced our first close. We're thrilled. We raised just over $1 billion for this fund. And, it's really on the back of investors' interest and the opportunity set. And as we're looking out over the globe and investing primarily in OECD countries, we're excited about what's happening in the Asia-Pacific region. There's a lot of really interesting opportunities there. Here in the United States, there's always a big demand for capital in renewable power. We're seeing this at all ends of the spectrum. Offshore wind is something that's starting to get some traction. Also, the commercial industrial kind of behind the meter solar and battery storage is something that we expect to see a lot more activity in the U.S.
So how has the price gone up for all these kind of investments now that it's becoming much more trendy to talk about and invest in?
We have certainly seen, return expectations come down, and therefore asset prices going up, because investors are much more comfortable with the maturity and sophistication of the technology, and also the maturity and sophistication of the markets and just the financing structures that go into the projects. So we're seeing some convergence. Some might argue that the projects are still have room to converge further. Solar in particular is viewed as very low risk by investors.
So what's the right way to look at it? Because are we seeing money come in that wants a quicker return? They're looking at a life cycle of like 5 years versus, say, your expertise. You're on the phone we were talking, you need a longer life cycle for these projects, 10 plus years. Walk me through the distinctions that you're noticing in the market.
Yeah, so really, if you think about sort of the sectors, and if you go kind of venture capital, private equity, infrastructure, asset investing, at the venture end, that's really sort of technology plays. That's folks that are thinking about next generation technologies in the space. And so they'll have a shorter life cycle for that investment. At the private equity, in the private equity bucket, if you will, kind of opportunistic, I think there you'll see folks, at the development end. So really, folks, making investments that aren't earning current yield, but, have the opportunity to then flip into where we invest, which is at the asset level itself.
Go ahead.
No, I was just going to say, so what's attractive about that, I think, is you've got an uncorrelated yield, and you do still have a total return opportunity as those assets mature, they become further de-risked, you optimize the asset, and then you're able to find more of a really, core or super core investor.